back into sell-off mode. The Nasdaq dropping more than 2% today, posting its lowest close of the month. The S&P and Dow each shedding more than 1.6%. Fears about valuations in the AI trade weighing on tech stocks. All but one member of the Mag 7 down today, with Tesla's 6+% drop leading the losses. The group losing a combined $500 billion in market cap just today. Also spooking investors, new commentary from the Fed, sending chances of a rate cut in December sharply lower. Markets had been pricing in a more than 60% chance of a move just yesterday. Now there's about a 50-50 shot. So what do you make of today's action? Is a sign of some real air coming out of the AI trade? Certainly what we saw in terms of the Nasdaq 100 doing worse, semiconductors doing much worse, RSP, equal-weighted S&P, doing better than the tech heavy indices. I
think relative is the term of the day. I mean, it's all, in terms of taking even some of the Fed out of the equation, if we're talking about missing out on 25 basis points, if a suddenly hawkish Fed is going to tap the brakes, I don't know that even really matters on the story for equities, but it's amazing how on a relative basis, we're talking about valuations today. We're talking about data that we had already said we weren't going to get that now we're concerned we don't have. So I think it's again, it's all relative to where we are approaching this from. This is the third kind of big sell-off day we've had in a couple of weeks. It's starting to become more than just a one-off. It is starting to look as if some of the key levels that we bounced nicely off the 50 last week, that was resounding, but suddenly you're testing again. So I think it's a case where the Fed, as we always say, it tends to be paramount in the context of market and momentum and where we feel. I'm not sure that much changed today in terms of the outlook, but there's no question we suddenly are thinking about the things that we weren't thinking about yesterday.
Yeah, I mean, obviously the Fed is part of the equation, but it doesn't seem like the reason why there is air coming out of the AI trade. And also there's nothing new necessarily in the concerns of the AI trade when it comes to return on investment. We knew that they're issuing loads of debt in order to pay for this CapEx. It's not like anything has really changed. It's just investors are scrutinizing that now.
Yeah, and I think it's just rubber hit the road type time. When you look at it, November and December are really your best months seasonally to be invested in the marketplace. And if that flips on its head, it's going to hurt a lot of people. The market always sets up to hurt the most amount of people at any given time. If we have a down December, it's going to be painful. Crypto is hitting a wall. So does crypto get back on the horse? Does that run back higher? If you look at the 7 names that are responsible for all the gains, they need lower rates, right? So if December doesn't happen, it's a problem for the market.
Courtney.
Yeah, and I mean, when you look at today, there was not a ton of news, to your point. I mean, nothing really changed the picture on valuations, but what did happen is we got an end to the government shutdown, which you saw this run up on the optimism that was going to happen, and now it's actually happened, and I think some of that's already been priced in, but now people are realizing, okay, we're not going to get some of that government data that we were hoping we were going to get, and that is actually what's leading to maybe we aren't going to get these rates cuts, because if we're not going to get this data, it's not going to be there, and I think that's what some of this sell-off is, and you are going to get, after such a good run in the markets, you're going to get some profit taking, you're going to get some rotation out there, so I don't think this is something to be overly concerned about. But yes, you are going to see these days happen after these big run-ups that we've seen.
Mm-hmm. Mike, what do you make of the sell-off today, and how have you positioned in the markets?
Well, we have positioned to slightly lower beta. I mean, we did have a lot of high beta names. We did add considerably to NVIDIA. That's going to be in the filings overnight, but we bought a big piece of that. I think to Tim's point, the 25 basis points, that wasn't really the important aspect. The question really was, do we have an accommodative Fed or not? And if you do, it's tough to hit bids going into that, right? But if you suddenly get into a new framework, a new paradigm where we don't think that's the case, that is a little bit ticklish. Now, one other thing I would note is that what we saw was a lot of volatility in some of the highest flying names. I mean, I saw a lot of names in the book that were swinging around by high single digits, even hitting as much as 10% moves in some of sort of the really high beta stuff. And I think what that tells me is that some of the weaker hands are the ones that in the more speculative things are getting shaken loose. But, we have the 50-day, and probably Steve can speak to this because he's more of a technician than I kind of feel like we're getting to a truth moment in both Bitcoin, which I'm a long-term bull on, but has been in a pronounced downtrend for a while here. And I feel like this is that moment of truth. I mean, if you look at a really long-term trend in Bitcoin, so just say you're looking at weeklies going back to early 2023, we have been sort of in this uptrend, and it feels like we're right on the border here of testing this again. And I kind of feel like we can hold this, then we could actually have a pretty good Christmas. But I feel like if we break it, then a lot of the things that are associated with that trade are going to break along with it.